Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Friday, the 14th of May. Starting off with Ascent Resources, which hasn't been doing much ascending in the recent past, but it looks as though we might just be in for a slightly more bullish phase than we've had since, I suppose, the beginning of February. Falling wedge breakout through nominally around the 4.5 pence level, so on an end-of-day close or weekly close above that. Got some bullish divergence in the RSI window, so lower lows over the post-March period, but the RSI has remained flat to rising, especially in the last dip there. That's a higher RSI low there versus the lower price that we had yesterday. And the view is that end-of-day close above 4.5 pence could at least take us back towards the 200-day moving average level at 6.25. I suppose the key level to break in the near term is that old April floor at 5.2 pence, end of day close above that, also inspiring more confidence. But the chance here that while we hold above yesterday's support around 4.5, we could see 6.25 over the next week or two. On to a rather easier situation, one which is quite appealing, at least on the rule of the opening post IPO breakout. So here on Cornish Metals, we had the range around 7.7 to 12 pence, and we managed to actually build a bull flag there above 12 pence over the last few days. The view at this stage is that above 12 pence we could hit the top of that trend channel, which is a guess obviously because there's no data, but up towards 21 or 22 pence as soon as the end of next month. But looking like a decent U-shaped or saucer-shaped turnaround for the shares, and that handle there on the cup and handle, let's call it, above 12 pence, also inspiring confidence. On to a stock which I thought I'd included earlier in the week, but I managed to miss out of the list as I jumped across it. Here we've got a falling wedge again for Clontarf Energy. The top of the wedge around 0.4 pence, so roughly where we are at the moment, and the 200-day moving average, so end of day close or a weekly close above that. And you can allow up to 0.45 if you're fussy. And that could open up the prospect of a top of broadening triangle target there, broadening triangle there from December as high as 0.75 pence, and that might be seen sometime in July at the current rate of progress. Early back below 0.3 pence, below recent support, really delaying the upside scenario for Clontarf. Stock which has been great on the fundamental front and started kicking in as well on the technicals too. Obviously, we've had that rising trend, sort of broadening triangle there since October, but starting to look positive again. Yesterday's support well above previous resistance, the old peak there at around 17 pence, so that's a big positive. And while we hold above the 17-18 pence zone, looking for the top of that triangle as high as 25 pence as soon as the end of next month. Taking a bit longer than it perhaps should have, but still Jubilee on its way slowly but surely. Stock which I never heard of until very recently was Crops, but it became a bit of a favourite last month with the vertical push through 5 pence. That was a neckline resistance, and now the last couple of weeks we've seen what looks like a mid-move consolidation. If that is the case, then there should be a decent upside. So a move from echoing the 4 to 9 pence high rally that we had last month. So now from maybe 8 to 12 or 13, or in fact the top of that rising trend channel there as high as 16 pence by the end of next month. Initial target here was 10 pence, but that looks as though that will be exceeded, especially while we hold above the 7.5 pence area, the 20-day moving average. That was also a resistance on the way down. Requested stock is next, one which has been rather soggy in terms of the price action. Didn't quite get its act together when Bitcoin was at its best. In fact, did rather better at the beginning of the year. But the current situation, we've got this broadening triangle to the downside, which is not great, but the shares did actually bounce off the floor of the triangle yesterday around 42 pence. So probably going to see some test for support towards 40 pence, but at least while we're above that, obviously we've got the support going back from the beginning of the year, and then before that there was only a minor blip below 40 pence in December, but otherwise 40 pence has been the floor. So it should be a case of 40 to 60 pence, the range re-establishing itself for mode, if we can hold, especially if we can hold yesterday's low, which would inspire some confidence there as well. Stock which is rather more straightforward perhaps is Plant Healthcare. Here it looks as though we're finding support of the floor of this rising trend channel from back in October. That's around 14 pence, but the overall view here is at least while we're above the 200-day line at 12.5 pence, the target here over the next couple of months, maybe by the end of July or mid-July, is up to 22, 23 pence at the top of that November trend channel. Stock which I know a lot of people have been willing higher over many months now is Physiomics, and sort of stock which gets sold into quite aggressively when it spikes. So we had that in December, and then we also had that in February, so hitting a wall at 10 pence. But we had a gap to the downside earlier in the month and a bear trap as well below 6 pence. What we'd like to see is an end of day close back above the top of that gap at 6.3 pence plus. If we do, that would be one of our favoured setup signals. I think if you're watching a video with me and Paul Hill earlier in the week, you saw that there was a similar gap close, bear trap gap close in Lloyd's. I think it was under 26 pence. So ideally, above 6.3 pence, we get a decent end of day close today or early next week, and then that could set the scene on a move up towards the top of that broadening triangle from December as high as 14 pence over the next 2 to 3 months. If you're not convinced, then you'd probably wait for an end of day or a weekly close back above last month's resistance at 7.5 pence. But could be an early bird opportunity there at Physiomics. Just a couple of stocks to go now, both quite high profile. First one is Tiziano, which has been, say, on the back foot rather painfully over the recent past, especially with the that final little spike we had up to £1.25, which was sold off quite sharply. Here it looks like we've got a bear trap rebound, so the lows there in, the low there in December of 73 and the low there in November 72. Low yesterday was around, well, the low in fact today was 70, and the low 70 yesterday as well. So it's a 2 pence bear trap, and that sort of situation does tend to lead to reasonable reaction. Initial target here, the 50-day moving average at 93 pence, which would be decent, and obviously there could be another retest of the 200-day line sometime maybe in June. If you're cautious here, then you'd wait for an end-of-day close back above that resistance line, the top of the falling wedge there from January at 82 pence. That should then see or trigger reasonable follow through for the shares. Always like to pick on a stock which is being hit by the bears, and today's selection is Turn. Here we've actually hit the resistance line projection, which is the last time I looked on, say from the chart, the last time I looked at this stock at 25 pence. So that's a sort of a major plus point. While we're above the initial May resistance at 21.4, looking for greater highs or higher highs. The normal sort of rule here is that a break of 25 would lead to 40, but just looking at the resistance line projection here, and we have that figure, in fact, from an August resistance line projection on the daily chart. So an end of day close or a weekly close above 25 pence whenever we get that, if we get that, and we could see 40 pence on turn. And I think the keynote here really is that unlike the previous spikes for the shares, on this occasion we've actually seen a push higher. We did have a pullback from that that spike last month, but it didn't last last week rather, but it didn't last very long. So this is an exception here over the past year, or in fact 2 years, for a rally to extend itself quite well. So above 25 on turn, possibly up to 40 pence, while we're above the 20 pence area. That's it from me today. Maybe get an update over the weekend.